Whoa. Hold on. Well, good. Welcome to probably the most anticipated video in this boot camp, or part of the series of the most anticipated video of the boot camp. We're not getting into charts today, to your sadness. Today is putting the pieces together, part one, where we go over every single building block and start plugging them in and start figuring out how can we actually put these together and how can we make sound trading decisions based off of all these building blocks that we have, based on this newfound knowledge that we have within the market. So without further ado, let's just get right into it. Let's try and make this quick. There's going to be lots of notes for you guys to take on this. I suggest you guys write all these down. It'll be very helpful. Okay, so putting the pieces together. First of all, what are our pieces? What are our building blocks? We have liquidity sweep, we have break of structure, we have order block, we have fair value gaps, and we have equilibrium. Okay, those are our, how many is that? 5 building blocks within this. Okay, next, what do they tell us about the market? Okay, so what do liquidity sweeps tell us about the market? Liquidity sweeps show us the potential for orders to get filled, right? It just means a high or a low getting taken out. We don't know whether it's confirmed yet, right? And how do we get confirmation? Next one, break of structure. What does break of structure tell us? Confirmation that orders were filled and we see a market structure shift, right? If we're in an uptrend and we see a liquidity sweep and then a break of structure to the downside, it's pretty safe to say that, hey, smart money orders got filled and we're going to go in the opposite direction. Okay, moving forward. What do order blocks tell us about the market? Order blocks are the price range where orders were filled, right? It's that boom, that move up that caused the liquidity sweep where orders were able to get filled within that price range, okay? And then boom, price drops because of it. Next, what do fair value gaps tell us about the market? Fair value gaps are the price range with a lack of liquidity, right? There was nobody going in the opposite direction of the market, right? It's usually that big candle, that big imbalance candle, right? Either big candle to the upside or big candle to the downside with no counteracting orders within there, right? So there's a lack of liquidity within that price range. And then what is equilibrium? Lastly, it's just finding that discounted price between highs and lows, okay? Write all that down. Write all that down. And let me shrink my face for y'all so you can read this. Write all that down. Okay? So, how can we find entries? How can we put these together? How do these tools, these things, give us entries when put together? First, right? We'll just do these in order. First, liquidity sweep combined with the break of structure. We had orders that had the potential to get filled off of a high or a low within the market, and then they were confirmed that they got filled by a break of structure because we can literally see market structure shifting. Okay, that's the first way that we can find an entry within the market. Liquidity sweep, break of structure. Why? Because we have the potential to fill orders, and then we see confirmation that orders were filled. Enter, right? Because that's going to be the top of the move. Moving forward, another way to enter while putting these together, liquidity sweep, then break of structure. Let's say we don't like the risk to reward that gives us. What is our first retracement tool that we always look for? That first retracement that we could get. Order block, okay? When orders have the potential to get filled and were confirmed that they were filled by a break of structure, and then we wait, we're patient because we didn't get that risk reward that we wanted. Maybe it was, a bad risk reward. So we wait for the price range where orders were filled previous, right, in that order block, in that move up to get an optimal entry. We enter at the order block, stops above the highs. Moving forward, what's another way for us to enter? We see a liquidity sweep, we see a break of structure, and we see a fair value gap get filled, okay? And these don't have to be simultaneous, right? You could see a liquidity sweep, a break of structure, you miss the order block entry, price trends lower, and then you see a fair value gap that you enter off of, okay? So what does this combine? Orders that had the potential to get filled, confirmed that they were filled by the break of structure, and then we wait for the price range where there was a lack of liquidity within the market in the opposite direction of our bias, right? So if we're bullish and we see a fair value gap, a bullish fair value gap get filled, that means there is a lack of liquidity to the downside within that price range, right? Which is against our bias, and we're waiting for that price range to get hit and a reaction off of it, or just for it to get hit for us to enter. Okay, and then lastly, all right, we have liquidity sweep plus a break of structure plus a fair value gap or order block getting filled plus equilibrium on top of that for ultimate confluence. Okay, this is like a foolproof plan to enter if you are a beginner. Okay, the higher up you get on this list, the more risky you get. As you can see, right, these two are kind of equal. This is the most safe, this is the most risky. Okay, it goes like 1 most safe, even most risky, 3 most risky. Okay, so what are we looking for on this, right? We have a liquidity sweep, break of structure, fair value gap or order blocking getting hit, along with the confirmation of price being in a discount. Okay, so what does that mean for us? Orders had the potential to get filled with the liquidity sweep. They were confirmed that they were filled by the break of structure, and then we wait for the price range that has either a order block or a fair value gap, right? So either where price was able to fill orders previously, or where there was a lack of liquidity within the market, okay, along with it being within a discount for us to enter. And that is how you can put the pieces together to start taking trades. I know this was a relatively short video. It's going to be a lot of shit for you to write down. Write all this down. This is your homework. Write all this down. This is part of your execution plan. This is part of your execution. So remember yesterday when we talked about our trading plan, this is a part of it, okay? So when you had your trading plan, when you said your execution plan, you need to write out, you need to choose which one of these that you want to use, okay? And make sure you write these down in your notebook, okay? Write down and understand why the market's moving. Understand what these are and why we're taking trades off of them, not, oh, it's bouncing off a floor. Oh, it's bouncing off the freaking EMAs that cross. Come on, bruh. We're smarter than that. We're better than that. Let's be good, okay? So, with that being said, we put the pieces together. In 2 days, right, after tomorrow, we will do Putting the Pieces Together Part 2, and my guess is I will film that today because it's going to be a long-ass video. That's my guess, at least. Long-ass video showing examples of liquidity sweep and break of structure, liquidity sweep, break of structure, order block, liquidity sweep, break of structure, fair value gap, liquidity sweep, break of structure, fair value gap, order block, and equilibrium all put together. Okay, so with that being said, I appreciate you boys. Make sure you write this down. This is very important. As you guys know, this is your strategy. This is how you're going to execute. And I know that I say strategy isn't the biggest part of trading. It's not. But if you don't know how to execute, that's a big issue. The bigger issue is when you know how to execute, but you can't control your emotions and you can't be robotic with it. Okay, but the first step is understanding how to execute, and this is how you do it. So make sure you get this down. Make sure you understand all of these things, and if you don't understand them, okay, go rewatch the bootcamp videos on all these building blocks. Go rewatch my solo YouTube videos on all these building blocks that I made literally at the start of this YouTube channel. Okay, rewatch all of those, get a good feel for it, and then from there, we will be locked in. We'll be ready for the charts. All right, with that being said, I'll catch you boys tomorrow. Been putting in a lot of work these past 2 days, so we can get these videos out to you guys. Hopefully you appreciate it. I know I've been working hard, and I know you guys have been working hard too. Let's keep it up. I'll catch you boys. Peace.